Hey everybody, good afternoon. Welcome to the Biotech Capital Compass video takeaways for the past week to about two. And yes, we are dropping this on a hump day, Wednesday. And I'm also trying something a little bit different this time. I have a script prepared, so it should hopefully make the less ums and ahs. I'm going to try to combine both off-the-cuff speaking with a prepared script, make it easier, hopefully on your ears as you're listening to this. So after hectic earnings week last week, I took a little time to reset. I walked through the Guggenheim Museum, checked out the Orphism exhibit over there, really cool stuff, and then took a sunset walk over the Jacqueline Kennedy Onassis Reservoir. I highly recommend both to folks. It's really beautiful. But let's get into the biotech trends that matter right now. The biotech market sentiment and macro trends. Let's talk about that first. So biotech shares, continue to be characterized by a divide. The large caps are performing well, while investors remain cautious on the SMID caps, small to mid caps, or SMID SMID caps, sometimes as they're called. Sentiment seems to be slowly improving. Let's talk about a good example there. So on the day of the DeepSeek AI news, which was January the 27th, that sent the broader markets into a panic mode. Large cap biotech was up about 0.8%, so 0.8 of 1%, so suggesting that buyers were stepping in. And then the XBI ETF, which is more indicative of the SMID cap space, the small to mid cap space, was flat for the day. Both the indices started the day very strong, with the smaller caps running out of steam by the end of the day. So to me, that's a good, that's good news. It means people are stepping in, and we have buyers looking, because people might be considering our sector to be oversold. Now, having said that, biotech is still very highly sensitive to interest rates. Any sign that rates will stay higher for longer, and the sector does trade lower. We're also seeing signs of a potential rebound in M&A activity, and the IPO interest is slowly starting to return. Let's talk about winners and losers here, over the last couple of weeks. Among the large cap space, look, Gilead really just stands out. This is a company that we wrote about in October and November of last year. We did a call with an HIV expert that is there for our paying subscribers. If you really want to understand how the HIV market works and how excited this gentleman was, he's a prescriber for a lot of HIV patients, how excited he is about the innovations that Gilead and also GSK are doing in this field, but especially Gilead. Gilead reported very strong revenues and earnings, and the stock is up, I think about 7 or 8% last time I checked. It's a solid story, but again, the real test here will be investor patience. The first quarter tends to be seasonally weak, with revenues typically dropping about 10 to 15% quarter over quarter. That's it. That's already in consensus numbers right now. I'm talking about Bloomberg consensus. Excuse me. But I'll be looking to see if investors are patient and can work through this quarterly and quarterly drop, understanding that's a seasonal characteristic of Gilead's business. That earnings call will be at the end of April or early May, I believe, their first quarter call. On the small cap side, AI-driven small cap biotechs have been on a tear recently. Companies like Recursion, Schrödinger, Accenture are tapping into AI to accelerate drug discovery, and the market's really taking shape. So, this is something I would be paying attention to. I think the AI hype in biotech, I think it's important to understand. It could be one of two buckets. One bucket is essentially people excited about AI and investing in sectors where AI is making a difference. For example, in biotech or small cap biotech companies that are using AI, for example. Or the second bucket, which is that small cap biotech companies that are using AIs to turbocharge their business model, drug development, target discovery, et cetera, move projects more quickly through the clinic, then they're benefiting from AI. So there are two very different buckets. One is a wave driven by AI interest in general, and the other one is the usage of AI by biotech companies specifically to speed drug development and increase probabilities of success. That second bucket is where I would be really excited investing in small cap companies, focusing on AI there. And we will be writing on this more and talking about this more going forward. In terms of companies that have been taking a little bit on the chin recently, Regeneron, of course, has been taking a hit. It's down over 40% since its highs in the third quarter of last year. The Eylea high dose adoption hasn't gained really traction as quickly as expected. Looking ahead, we see really a comeback story in the second half of 2025. We had mentioned in our, I think our November or December, in-depth writing on Regeneron, and we just recently just wrote on Regeneron again just a week ago or less than a week ago, and we basically indicated that Eylea could start growing as quickly as the second half of 2025. We'd mentioned that in November or December last year, and Regeneron management actually indicated that's possible on their fourth quarter earnings call. It could happen by the second half of 2025. If that's the case, then really we expect this to be a comeback story. Regeneron really remains one of the best growth names in large cap biotech. Also, the other loser, again, I've said this, mid-cap biotech is still having a tough time. And in order for like our sector to really shine, sentiment in the small to mid-cap space really needs a big boost. I just want to mention that, that Regeneron's growth profile, again, is one of the best in large cap biotech. What I mean by that is this is a company once we get past 2025, where analysts are expecting a down year for revenues and earnings, then 2026 onwards, you're seeing 5 to 10% revenue growth and about 10 to 20% EPS growth. Now, again, there's a big if here. The big if is if Eylea can stay stable to down, stable to slightly down. If that's the case, then we could see this growth going forward. And we have written on previous notes why Eylea is so important, its profitability of the company, et cetera. But again, I expect Regeneron to really be a comeback story in the second half of this year. And then again, Gilead is just quietly thriving. Its HIV franchise is dominant, which should remain dominant. As we indicated, we did a HIV expert call in early January. You should really listen to that. Of course, it's available to our paying subscribers. But please listen to that to really understand why we think HIV is going to drive Gilead for the rest of this decade, and oncology will add to that. While Regeneron faces near-term headwinds, Gilead really looks like the safer bet right now. In terms of regulatory and policy shifts, a couple of important ones we're just calling out. The FDA, I think, withdrew its diversity guidance for clinical trials. I don't know if they've updated that. Now, again, that's diversity within clinical trials. So we really saw this during the COVID-19 trials in 2020. Those were the first time in very large trials, tens of thousands of patients by both Moderna and Pfizer and Biotech, and Moderna on one side. They recruited a clinical trial population that was representative of society in the United States. Because they wanted to make sure that the data was not skewed by any one ethnic or racial subset. And that's where FDA guidance, diversity guidance in clinical trials really matters. It's not about diversity per se as, it's sort of seen in the broader, as a social political issue, but more about diversity to get us a more robust data set. So when drugs are approved, what we're seeing is a label that's applicable to the general population, not to a subset of the population. The Trump administration also is revisiting Medicare drug pricing negotiations. Just remember, President Trump was actually a supporter of drug pricing negotiations in 2016 and again in 2020. I don't think his stance has really changed there, but they could still tweak it. Parts of the Drug Pricing Act that are a portion of what's called the IRA, the Inflation Reduction Act, that was passed by the Biden administration. This could change the pharma pricing landscape. It matters less to biotech, more so to pharma. Again, keep an eye on that. We will be doing that too. And again, biotech approvals are coming through pretty quickly. Good beginning of the year with quite a few approvals, which is a good sign for the rest of the year. In terms of just a market outlook, look, here's the thing. The MBI index, is mostly large caps. And that's been stable above key support levels. So large cap biotech looks to be in good shape. The XBI is what's struggling. And if we see a break above 9,600, that could really trigger a broader rally in the sector. It seems to get up there, can't seem to get past that. There are, of course, technical traders and analysts that are far more sophisticated than me at this. keep an eye on them also. But I do think that 96 to 100 range in XBI, getting beyond that and staying beyond that consistently would be a very good sign for our sector. And again, M&A is picking up. We wrote a note just recently, a week ago, indicating that just looking at January, M&A is already potentially looking better than last year, and IPO looks to be in line with last year, the IPO activity. That's very good signs at the beginning part of this year. So again, the closing thoughts, as I said, the sector is at a crossroads. Trade wars, rising dollar, regulatory shifts are adding volatility, but strong commercial execution is really separating the winners from the losers. Again, that of course matters more at the large cap side. We look forward to the United Therapeutics earnings calls. That's a mid cap company we really like. Later in February, that'll be interesting. If that company continues to commercially execute well, that's another stock we expect to continue to do well. We will wait for that in a week or 2 weeks to see what those revenues earnings look like. So I hope you found this helpful. A prepared script a little bit better than completely off the cuff. Drop your comments, your thoughts in the comments, please. If are there any biotech trends you're watching, and don't forget to subscribe for more insights. Stay savvy, and I'll see you next time. Thank you.